Okay, folks, welcome to Best Stock Charts for the new trading week. So I included the word explosive in the title of this video. The reason is that we're using a strategy called the Bollinger Band Squeeze. And yesterday I did a video. I've included it in the chat area with a link. It's posted on YouTube as well if that doesn't come through on your end, where we did the analysis of the charts that we wanted to review for the new trading week. We used TrendSpider's functionality for Bollinger Band squeeze setups. We found a bunch there. We used stockcharts.com functionality for a stochastic squeeze. That's my own proprietary formula. And we came up with some really good setups for the new trading week. So stick around. Before we get into the charts that we're watching for the new trading week, I want to talk to you about the 30th. It's a big day, and that's when we launch the Contrarian Trader Public Network free. It's going to be a trading community for traders. I don't care if you're experienced, unexperienced, doesn't matter. As long as you have a willingness to engage, become part of a team to help each other out, share trade ideas, provide positive feedback, and somewhat perhaps critical feedback if it's constructive, not destructive, but constructive feedback when somebody with less experience than you may be making a mistake with their trades. So you want to give them feedback, not financial advice. What else are we going to be using this forum for? Well, we're going to be using it for our live streams, organizing our stock chart requests so that when we go live on Thursday nights and Sunday nights, like tonight, we'll have all of those requests set up, organized, so that way I don't omit anyone. So a lot to offer here. It's the ideas that are being pushed forward to me are really overwhelming, to be honest with you, what we're going to be able to do with this forum. So head on over, use the link below if you watch this on YouTube, above if you watch this on Twitter, or just simply use the QR code on your screen right now and enter your email address. You will not be prompted for a credit card at any point. It's free. Free means free. All right, so there's no bait and switch here. Free means free. So head on over, link on over. We have a bunch of people waiting, and we're going to be launching on the 30th. And when we do, we're not going to be doing Sunday Night Futures Live next week. We're going to be doing Monday Night Futures Live because it is Labor Day. And we will be doing that analysis that now it's going to be a 3-day weekend, so a lot of news to go over. We're going to be doing that in the forum, in the private community, or actually public community. You just need to be signed up. So head on over, enter your email address, first name, that's it. No credit card requested. So let's get to it. Let's talk about the charts that we want to look at for the new trading week. And first off, I'm going to talk to you a little bit about the strategy, the formula that we used, or I should say the scan that we used. This scan here is on TrendSpider, and I will show you their QR code as well. I get 35% off sharing it with you. Link down below on YouTube, link above on YouTube, excuse me, on Twitter, if you want to get 35% discount code. So how I scan for recent trades. We'll talk about recent trades. I did videos on them. It's documented. It's on YouTube. It's on Stock Twitch. It's on Twitter. So it's all date stamped. PayPal. This is one that we picked up back here. What is the Bollinger Band squeeze? We're looking for trades that have Bollinger Bands in black trading within the Keltner channels and that give us a nice orderly setup. And we spoke about PayPal a few weeks ago, and you could see that we had a rip-roaring rally once this thing got going. Another one was SMG. We traded this one, and we made a good amount of money. We bought here, we sold here, and it's since pulled back. It is now back on our watch list. So this is one that's interesting as well for the new trading week, because it looks as though we are beginning to break out yet again. The Bollinger Bands are tightening up. SMG looking good. It's not one of our top picks for the new week. It could be next week if it doesn't rally first. CCEP, this one was on our watch list for quite a while. We traded it, but we got stopped out during that sell-off in the first week of August. And ever since then, you can see how we were inside this trading range for a while. And it blew the doors off of the market over the past several trading days. So these are the types of setups that we're looking to trade, and a lot of these are big dollar trades, big dollar stocks. $400, $500. And you may be saying that's not for me. Well, I'm not buying the common stock either. I'm going to be putting on options trades. So probably the trade that we'll be using here on a number of these trades will be what you call a debit spread. What does that mean? What that means is that we're going to be looking to put on or buy a 70 delta call option and simultaneously selling a 30 delta call option. Some of you may be saying, I don't know what that means. Okay, a 70 delta, when you buy a 70 delta call option, it means that you're buying an option that moves 70 cents on the dollar for every move up higher on the stock. When you sell a 30 delta, well, you're selling an option that moves only 30 cents for every move of the share price for every dollar. So what does that do? It gives us a hedge. We're not saying, all right, I'm going to buy an at the money. I'm not going to buy a 70 delta option with no hedge. Maybe we're wrong. Maybe we're early here. We're going to go out about 65 days on these options. So all we're going to do is that we're going to provide ourselves a hedge. That hedge offsets the time decay, at least some of it, that we're going to be realizing potentially if we're waiting too long on that 70 delta. All right, so it's a very trader-friendly way of trading. You reduce the amount of buying power that you're putting up to buy the shares because you're using a hedge, and you are also not buying the common stock, which could be upwards of $300-$400. All right, so we can also adopt the strategy, and we can do both actually, of selling a out of the money call spread or a credit spread while we're waiting for the chart to firm up a little bit. We sell puts, and that way what we're doing is we're generating cash flow, even though the share price isn't doing much, right? And then we look for a good setup for a breakout, and then we put on that call spread, which I just discussed. So that's what we're going to be looking at as we go over these trades. That's the concept. That's the structure of the trades that we're going to be putting on. So let's talk about the trades that we're going to be watching for the new trading week. Now, most of these I went over yesterday with the exception of one, and that would be Hub. And I guess we'll kick it off with that one. Hub appeared on my scanner because it appeared as though it was setting up for a continuous breakout pattern. Now, before I get into these charts, I'm going to increase the size of these charts in a moment, so don't worry about that. You don't have to look at my ugly face. And I'll minimize my head. But also in the members area, I'm going to be putting entry points, stop points, price targets. Again, in the members area, you need to be a member, entry points, stop points, and price targets. So let's get to it. Hub. Okay, so this is a weekly chart, and you can see that last week we had a nice bullish key reversal bar, very bullish week. The one problem here is that we have resistance immediately above at 394. This is an instance where I would probably consider selling a credit spread, waiting for the stock to rally and to break out above this resistance level. Then once we do, then we could look to either close out for a profit, the credit spread, or keep it on, and then look to put on a debit spread, opening that 70 delta 30 debit spread on Hub. So on a daily time frame, we broke out on Friday. We may do a retest of 380.70 tomorrow, which is a support level. How do we know that? Because that is what the trend lines, the automated trend lines, are telling us. Click of a button. Bam. This is the algorithm that TrendSpider provides us. Again, 35% discount code. Use that QR code in front of you, and it'll take you on over to their checkout page. And they have a 7-day free trial offer. I believe in this so much, I give it away free to our silver and gold level members. So that's Hub. The next chart up that we're watching is FANG. Now, one thing to keep in mind is that we saw a sector rotation, and sector rotation last week is favoring. If you go back in history and you take a look at indexes or sectors that do very, very well in an interest rate environment that's seeing rate cuts, energy is one of those sectors. Utilities is one of those sectors. Industrials is one of those sectors. Sometimes the banks are, sometimes they're not. But usually energy does well. So what are we looking for here? We're looking for best of breed. So with regard to FANG and the setup here, do we have a Bollinger Band squeeze? The answer is yes. Not very tight yet, but we have the Bollinger Bands inside the Keltner channels. That's on a daily time frame. On a weekly time frame, the Bollinger Bands are very, very tight. So my interpretation of the tight daily Bollinger Band squeeze versus the wide daily Bollinger Band squeeze versus the tight weekly Bollinger Band squeeze implies that we're going to break out weekly time frame very, very soon. We do not have a ton of overhead supply above. So what we're doing is looking to buy this breakout using a call spread and looking to get long of Diamondback Energy. Again, why? It's because energy does well in a declining interest rate environment. Why might that be? Well, reducing interest rates spurs economic growth. So if you have your industrials doing well, what do your industrials need? Well, your industrials need energy, right? Simple. So FANG looking very good. It's a best of breed play, meaning the fundamentals are very, very strong relative to their peers. And what we're looking for here as well is, I should say, what we wanted to look for here are higher lows on a daily chart. We got that. Now over here, at 203 per share is the pivot point. So this is a W formation. I'm a buyer of the shares on a breakout above resistance here. Then I want to add more above 203 per share. Why does that happen? Why does that matter? It means that what we're doing is we've gone from putting in lower highs and lower lows to now putting in higher lows and higher highs. Bullish. The next chart that we're watching for the new trading week is Wing. This one has been in fuego of late. Yes, it's pulled back. Here's the weekly chart. And you can see that it broke out of a weekly Bollinger Band squeeze back in October of 2023. Look at this rally. This is why we use this strategy. So we went into a consolidation, and we have since began to, after the sell-off early in the month, began to rally and now break out above this 390 mark. Daily chart. Now we're looking for a retest of support. Then we want to initiate bull operations on Wingstop. This is one of my favorites going into the new trading week. Why? It's because it's a discretionary name. What does that mean? Well, if they're going to cut interest rates, people are going to have more money because they're not paying extra money on their credit cards or paying more money at the stores, ideally. And they're going to be able to go out and spend more money at Wingstop. So we have a nice breakout, setting up for a continuation breakout pattern. Wingstop, one of our faves for the new trading week. Take note of the tight Bollinger Band squeeze on a daily chart, and it has begun to fire off to the upside. The next chart, XPO, another energy play. Here's the weekly chart. Again, weekly view. We have the Bollinger Bands in black, trading within the Keltner channels, and we are dancing on top of critical support levels, weekly support levels, because we broke out the week of the 12th, did a retest last week, and what do? Follow through. Bullish key reversal. Very, very favorable price action on XPO, daily chart. This chart looks like it's getting ready to blow up. meaning good blow up, not bad blow up. It wants to move up higher. Again, these names are going to benefit from rate cuts, and they're coming. The next chart up, SNA. SNA is a play on industrials, right? So again, we didn't do a scan. Well, actually, I did do a scan, but it wasn't our primary scan of the NASDAQ 100, which we would normally do because those have been the leadership names. All right, we didn't do that. We're taking a look at the mid-cap names now. Why? Because that's where the sector rotation is going. The mid-caps and small caps on a daily basis on Friday and on a weekly basis last week have been outperforming the S&P 500. Why do we want to trade the mega cap names when the smaller cap names and the mid cap names offer us more alpha, meaning the ability to outperform the S&P 500? There's going to be more money going into those names because the environment has changed. Borrowing costs will go down. With borrowing costs going down, that stimulates the economy. So what does well in that environment? Small caps, mid caps. So SNA, Snap-on Tools, everybody's heard of them. This is more of an industrial play. People are going to need to buy new tools. Companies are going to need to buy new tools. What's doing well? Let's take a look at the weekly chart. Very tight Bollinger Band squeeze setting up on Snap-on Tools. And take note, we have been in a tight consolidation since, let's call it June of 2023. So the saying I always like to use is the longer the consolidation, the greater the validation of any breakout. So this is setting up nice for a continuation breakout out of a primary trend, which has been up. So take a look at the last time you had a consolidation similar to this, even tighter than what we're in right now. Look at the explosive move up higher. So we broke out here at 221. I mean, we rallied all the way up to 291. That's a nice big fat move. So we're looking for similar price action here on Snap-on, especially with the promise now, the promise by the Fed chair on Friday of rate cuts. The question is, do we get a quarter basis point or do we get a half basis point cut going into September's Fed rate meeting? We're going to be talking about it tonight on Sunday Night Futures Live. Join us 6 p.m. Eastern Standard Time. The last chart. Did I go over them all? 1, 2, 3. I went over them all. I did them. That's it. I did them all. All right, so folks, all of these are going to be in the members area. Again, price targets, entry points, stop loss points. And the primary reason why we're getting involved with these trades potentially this week or the next week, it depends upon if they're showing up on our screen with a Bollinger Band squeeze on a daily or weekly time frame. On a daily time frame, we could be in these trades within the next couple of trading days. If they're showing up purely only on a weekly time frame, like here on Snap-on Tools, purely a weekly time frame, it could take us a week or two to get involved with it. But in the case of Snap-on Tools, the reason why this is so attractive and made it on to our list, and believe me, this list was about 20 symbols long yesterday, and I whittled them down to these names here. The reason why Snap-on Tools made it is because A, it's got great fundamentals. B, it's going to benefit from the industrial spending that you're going to see in the coming months. Also, you have a Bollinger Band squeeze on a weekly time frame and also on a daily time frame, and this Bollinger Band squeeze is already beginning to fire off. So Snap-on Tools looking really good. Folks, join us tonight, 6 p.m. Eastern Standard Time. And don't forget, TrendSpider, 35% discount code below. And also, we have the Contrarian Trader public network community coming out on the 30th of August. Join our wait list. No credit card required. Link below. If you watch us on YouTube, link above on Twitter, or just use the QR code.